All right, we're doing it. We're talking about backtesting today in this video. In trading, there's a big divide about backtesting, and that divide is usually between profitable and unprofitable traders. I'm sorry, I had to say it. At the end of the day, no one likes backtesting. I don't like backtesting, but it's a necessary evil. It's one of those things that you need to do, but you don't want to do. And when you do it, you feel a lot better for doing so, and it actually shows up in your results. And that's kind of the stuff I want to talk to you about today. What people will do when it comes to backtesting is they will make excuses for it. So many excuses, more like rationalizations about why they shouldn't do it because they don't want to do it. And whenever you bring the topic up, these are probably my favorite replies that you get about it, about why people don't do it.
You can't replicate the emotions of live trading and backtesting.
Yeah, that's a true point. You can't. But the reason for backtesting isn't to try and prove your emotions. The reason for backtesting is to work out if what you're doing actually works and can actually make you money. It is to collect a data set to see if your edge is something that you can follow up on in the live markets, and nothing to do with emotions. So, moot point in my opinion.
Backtesting isn't real money, so it will never matter.
Yeah, again, it's not real money, but you're not jumping on a simulator to make real money. The end goal is to make real money on the live markets, but as I said before, it's a necessary evil to have to go through backtesting on a simulator. But if you don't care about backtesting, if you don't take it seriously because it's not making you real money, then that's a you thing. It's not a backtesting thing. That's something that you're going to have to figure out yourself. If you're actually able to take backtesting seriously, then you'll find that you're going to take your trading process a lot more seriously on the live markets as well.
You can't ever trade the live markets as well as you can backtest, so it's pointless.
Yeah, this is true, but again, you've got to give yourself some sort of base to build from. You've got to give yourself a platform on which you can take it to the live markets, and that just comes from having a huge amount of reps, and that's the only way you can get a huge amount of reps in a decent amount of time is to backtest. It's not about having a certain performance on the live market. It's just knowing exactly what you're doing and having a watertight set of rules so that when you are on the live markets, you're going to be doing the right thing. But yeah, anyway, there's a ton of these things I can reel off and talk about, but let's focus on the positives. I introduced backtesting as part of my daily routine last year, and one of the reasons I did so was actually this book over here, which I'll recommend to you all. It's called How to Be Brilliant by Michael Heppel. In this book, he talks about the difference between those that achieve brilliant success versus those that achieve good success. And the difference is always going that extra mile. So when I listened to a few podcasts of profitable traders last year, and every single one of them mentioned some sort of backtesting, I asked myself, especially after reading this book, what could I be doing more to get the results that I want that I'm not doing? And it actually turned out it was backtesting. One of the key benefits of backtesting is maintaining a high level of confidence in your ability, because let's say on the live markets you're going through a loss streak. That could be a statistical loss streak, or it could be an emotional loss streak based on revenge trading, FOMO trading, just going on tilt, whatever the case is. But even if it is a statistical loss, and it could be a number of statistical losses, you're going to feel bad, especially if you haven't got that experience in the markets to understand that mostly gains are seasonal, and your P&L at the end of the year will usually have a good 3-4 month spell. A large amount of the time you're going to be suffering in the markets, particularly in your first 5 years in the market, I reckon. So it's good, in my opinion, to be doing something every day, especially if you can get one win every single day. And that could be obviously on the live market, or it could be on a simulator, but it's just good to keep your confidence in what you're doing high, so that when you go to the charts the next day, you're not going to be thinking about that loss that you took previously. You're going to be thinking, well, the last thing I did was actually take a win, so I can do that again on the live markets. I know exactly what processes I need to do and rules that I need to follow, and what my edge is when I come to the charts today, because I did that yesterday. So yeah, it's just good to get back on your feet, basically, I've found. Second benefit, helps you focus on your performance, not your profit and loss. And that's a really, really big thing. Everyone talks about having a process-orientated mindset. And one of the ways to do that is to focus on becoming a better trader rather than trying to become rich. Because if you're squeezing hard every day to try and get that money, to try get rich and to try get the money that you want to get you out of work or go on holiday or go live in Dubai or whatever the case is, you're going to make it really hard for yourself. because you're chasing something that you want too much. I'm not the first person to say this, but the paradox of trading is that if you focus on the money, you're not going to get it. You have to focus on the process. If you are able to turn up onto the simulator every day or every other day or a few times a week, focusing purely on just making sure that you're executing the trades properly and that you're following the process, when you come to the live markets as a result, it kind of blends in all as one. If you start recording your progress based on, did I follow my edge correctly? Did I follow the rules? Did I not succumb to the emotions that were telling me to FOMO or just take a little gamble? Because we all got them. At the end of the day, it makes a winning trade become habitual rather than this thing that you reach up for and you try to grab and you like keep it really tight to yourself. If you're focused on the skill of being a better trader rather than trying to get that money, you know that your skill, having done the work yesterday, today is better. And that's what it's all about, really. It takes the significance of the results away when you're on the live market. So it's not feeling as down when you take the losses, but not feeling as jubilant when you're taking the wins. And that's just a real key thing to becoming a more rounded person and a more rounded trader. A couple of other things which I found really beneficial is that firstly, it prevents stagnation. So the markets are always evolving and you could go a number of weeks without an A+ trade. You could have gone on a holiday, for example, and not been around. There could be a number of different reasons why you haven't been as active properly in the markets and executing your edge consistently. Well, if you haven't taken a trade for a couple of weeks and you're not going to take another one for another week, for example, then you're not going to be sharp. In a lot of psychology books I've read, they talk about conscious habits and subconscious habits. Subconscious habits are, and the cliche example they talk about is driving a car. Once you've learned to drive a car, you can do it automatically. You can not even focus on the road. You could be thinking about something in your head. You could be talking to the passenger in the seat next to you. You can almost go on autopilot. And once you've got to a certain level with trading, it's not on autopilot. Trading will never be a subconscious habit. You always have to be conscious when you're in the markets. So, by adding some sort of backtesting into your routine, it will make sure you will keep that level high. It will make sure that you're keeping your brain switched on consciously and you're not just clicking buttons for the sake of it or out of habit. But yeah, there's some of the benefits. There are also some of the arguments that you'll get for it. At the end of the day, it'll be up to you whether you want to go ahead and do it or not. It's something which I found super beneficial to me and my results skyrocketed after it. I actually had a mentor, Brian, at Inside Out Trading, which helped me with my backtesting and get me on track with that. So even though I knew that I had to do it, I didn't always pull the trigger and get around to do it. And having external help to push me in that right direction and to make it a habit and to show me how to do it properly is something that just completely changed my trading results within about a 6-week period. So I'm going to jump on the charts and I'm going to show you what I do as part of my process. This won't be the only backtesting video I'll do, but I will show you how I do it, what I try and get out of it. And you have to ask yourself, what do I want to achieve from backtesting? Because like I said at the beginning, there are a number of different arguments for not doing it. And people will say, well, I've done backtesting, I found out my edge is profitable and I don't need to jump on a simulator anymore. And to that, I say, you need to keep up practice with it. All athletes and sports people, it's the same type of thing. They take practice shots. I'm a big football fan. They have football training 2-3 times a week before they have the match at the end of the week. They do that for a reason. They don't just turn up to matches on Saturdays and just go for it. They're practicing, they're staying on top of their game, they're keeping their technique sharp, and backtesting is essentially that to trading the live markets. Anyway, let's jump on the charts. So I'm using the software called Forex Tester 5. What I'm going to be doing here is pure price action trading. So there's going to be no indicators. It's purely just going to be focusing on patterns. The reason why I backtest is, as I said earlier, just to practice my entry techniques. If you watch my previous video, you will see that I use the M5 time frame to mark out levels, and that's where I look to trade. For actual execution of my entry triggers, I will jump onto M1. Another good point to mention, because someone's probably going to write in the comments,
Hey bro, you need to make sure that you're trading the right time of day, otherwise your data is wrong, and you need to think about the news too, or you won't have the right variables in the live market and therefore your edge is inaccurate and backtesting is pointless.
yeah. Basically, my response to that is I'm just looking for patterns. I do not need to see the the time of the day. I do not need to see if there's news coming out, because I know my edge is profitable. I have rules set in place for the live markets where I don't trade on certain news events days, which I put up on my Twitter all the time that I'm not trading. So I give myself the London session and pre-New York to trade, which is about 5-hour window. And in that, I will look for patterns to trade. And that's what I'm just going to do here. I just want to see the patterns. I just want to practice the patterns. I just want to practice my entry technique. So that's all you'll see me do. Okay, so I'll shut up now and let's get to it. What I want to do is just get an idea of where we're at, what kind of trends we're in, and see what bias I want. I'm just going to mark out the key things that I see from my eye, which is this high here and this low here. So I've kind of built a little bit of a range. Just gives us a bit of an idea of what's happening. It looks a lot cleaner, looks a little bit more obvious now. So we are now coming up to the range high, but at the moment we don't have enough information. I just want to build some sort of bias somehow, but I need a bit more of a map. So for me, what I do is I will mark the nearest high and the nearest low, and which I've obviously got the range high and this low here, and then I'll mark this low. And these are kind of the areas I'm looking to trade in. So it'll be at this level, or if it comes all the way bit down, this level. Depends what builds, basically. So let's just play it out. I'm going to do it on M5, and then when I see something, I'm going to drop it down to M1, and then we can get an idea of whether we're going to get an entry trigger or not. Okay, so what we've got here is a breakdown of the range, or this kind of support. Can't go any further, and now it's pushing back up. We've got a higher high here. So what we've got is the top of all this cluster. If price comes up to it, maybe we can get a continuation to the upside on M1. Let's just wait and see. As you can see, the levels develop as the price action develops. Okay, so now we have this here. It's not that clean, so we're probably going to skip it. So here we've got a bit more sideways that's developing, but look at the time of day, it's night. So we're not going to get much here. So I'm just going to skip through to something interesting. Range high has been broken. We have this support, which is formed. We have a push up. We have a wick, which actually has tried to push up and continue further, but is now dropping back into the range. So we might get something here. Let's just wait and see what builds in M1. It might be okay. Nothing really forming yet. We've got obviously gone a bit crazy, so let's just play it through, see what happens. We will jump onto H1 and try find the next high, which is here. So that's interesting. Does it break or does it react to it? Let's see. I'm keeping this low as relevant, by the way. It's bounced off of it, but on a retest, I expect it's going to break if it comes down. Okay, so high there, low here. Okay, let's just jump to N1 because it's bounced but hasn't gone anywhere. Now it's retesting, kind of going sideways. We might have something here. Not really. Okay, we have a range here. We're at the lows, but it's kind of putting a double bottom. So what you'd expect is if it comes down, now that it's broken this high, if it comes down and then pushes up, we could go long. Otherwise, if this comes down, pushes up, but can't get any higher and then drops down below, I'd probably say we could short this. So that's a second break, but it's not that clean. Okay, now you can see the range is forming. It's giving us a little bit more information. Okay, it's trying to push up. I feel like a drop below is gonna send us down, but if it does push up we could, and gets a higher high, then we'll go long. It's splat. Okay, this looks like it's going to drop. So that could be the signal of intent from the market, or it could be our trigger. Let's see, the trend is kind of compressed, so you wouldn't expect it to go too quick, but we'll wait and see. What I'd like to see is another push up and then another drop, ideally, but you should be able to see that range form. And the simple reason of marking this range is that it's relatively clean. You have the drop down, retrace, drop down to touch this support, and then retested that high. So we've got a clear range there. Drop down below. Okay, and as you can see, price is just nuked. What we've got here now, so it's retested this level but broken it. Similarly, we have first trouble area, so price has come down, retraced, dropped to test this, similar to this here, but now we have a bit of support on the edge of this level. This is looking nice. So let's see what happens. If we get a bit of a sideways movement and then a drop down, I'm happy to short that. Kind of like that, but needed a little bit more price action. So just to confirm that kind of level here, I would probably mark it like this. But if this low gets broken again in a similar manner to this, because we've got a trend moving down, I'd be happy to go short. Okay, here, what we've got is it's taken out this low, it's pushed up, it's put a support in on the break of this high, pushed up, dropped down, pushed back up, formed a cluster, and you would expect continuation at this point, but what's happened is it's wicked the high, dropped down, come down into support, and bounced, but then it's filled this candle in. So I'm happy to short this. If we were in an uptrend and we saw this pattern, I would think it's more of a fake out, but as we've got the trend in our favor, a second break of this low is a pretty nice entry. So I'm going to short it with a stop above this high, and we'll go for 2R simply because there's a lot of support coming here. So I think we could probably go for this low. Now I've seen it on M1 because there's a little bit of a gap here. So yeah, let's do that. Let's see what happens. See if it could be a little bit higher depending on the RR. I'm just going to put it there rather than this extreme high, just because I don't think it's going to come up there basically, and then we'll come down to that wick there, sell, and let's see what we've got here. There's our order, and we've got 2.08. Okay, that'll be fine. Let's see what happens. All right, and play that through. Okay. So normally what I could do at this point is trail my stop. So I could put it above the second high. This is my trading stop technique basically. Once price has got to a trouble area, in this case a support, I like to move my stop 2 levels above where price is. So if we get another retrace and then a drop, I would move it down to here. We've moved quite nicely. I imagine if it comes back up now, it's going to come and stop me out, but I'll just leave it where it is for now and see what happens. Oh, okay, cool. That might go for a little bit more, but that's about 2R bagged. Fine. You're always going to leave profit on the table, so this may keep going down. But if it does, what I'll do, again, I do like this M5 level. If it consolidates here and then drops again, we'll have a second entry, essentially. Okay, so what we've got, a little bit of a range forming, kind of bounced here, put a little cluster in, broken out, retrace, pushing up. This could be a fake out. It could just be coming back to retest this level. It's kind of what happens around these lows. The thing with Forex is you never get like super clean breaks, like super rips. maybe like 9 times out of 10 it's going to retrace. So basically, if we get a similar sort of price action to this, where it comes down, hits this support, can't get any higher, and then comes and tests this support again, we'll go short. I'm not really interested in longs considering the downtrend. Okay, wasn't expecting that, to be honest. Let's just clean some of this muck up. So that's that. It may well be coming up here. Okay, but there's no clean price action yet. There's nothing definitive, so let's see what happens. Again, we have another little range that's formed. All right, so I'm gonna jump onto M5 because my read of this is totally gone now. Next level for me really then is this high, and then we actually have this low. So it could be a continuation of this trend. Now the high has been taken, this was a retrace, and now we're gonna go up and continue up. So what I would do is two scenarios. We'll either come up to this level, consolidate, and then push up, and I'll look for a continuation there. It may bounce off of this level, come down, consolidate here, and then continue up, or come down, consolidate, and continue down, and then we'll short, or we'll look for a long, or we'll look for a long. So that's three scenarios. This is looking tantalizing. This is the actual low. Even though on M5 that low was there, if we knock that down to M1, we can see these are all a reaction to this low. So I kind of want to see something happen around there. This is reaction to this, but we do have a nice potential range forming. So if we see a couple of clean breaks to the upside, then we'll go long, or vice versa, we'll go short if it comes to the downside. Okay, so like this. So what we've got is a push up, down, and then push back above the high. So I'm marking my range as that. You could use the top, but I like to use this first shoulder, which has happened before the retrace. It just looks a little bit cleaner. It's just something I've done with experience. It's now testing that low. So what we'll either get is push down, retest, and then another confirmation that it's going to go lower, in which case we'll short. This could be a fake out and it'll push up, in which case we can look for a long. Okay. That is technically it's a short, but it's not clean. I don't like it. It's not giving me much direction. It's just going sideways and it's not that clean. So what I would do in this instance is I'll just wait for, this could be the top of the move, and that's just confirming a top, and then we can look for a continuation down here. We just need to wait for it to build. See? Okay, so it looks more like a top has been put in. Let's get rid of that. We should be able to see this little range that's formed now. So on this range, I always look for ranges to form around support or resistance. We could get this drop down, retest, drop down again, in which case we'll look to continue this, and this will be confirmed as a top. Or it could be we get a couple of fake outs and then a push up in line with this trend, but this looks pretty toppy to me. So let's see what happens. Okay, taking that as a signal of intent, it's coming into support. Don't really want to short that yet, but we'll wait and see. I say that a lot. I wonder how many times I've said that in this video. Again, on the break of support, we have another little range. Sometimes you just got to use your eyes. There's no real definitive way to do it, but whatever looks cleanest to you. This does look clean, similar to this. So now we want to see, it could be that it just breaks through, but I want to see it break through, come back up, make sure we're definitely not going up, and come back down as a second confirmation. So there's the first signal, and it's just going to nuke. Sometimes you'll get this. If you watch my previous video, I gave you 3 different examples of how to trade these things. You've got to work out the conditions in which you can get away with taking this entry, but I can't in this instance. So let's jump to M5, see what's happening. So here, or it may even come all the way up here, because price in Forex doesn't like to nuke like this. But I'm backtesting, I'm recording, so it's probably going to be doing something completely different. Okay. Range is forming, you see that? In the complete inverse to what I was saying up here, we have a drop in price, and now we've got a bit of sideways. I've marked that retrace high before that low gets retested. It just makes it quite clean. Obviously, we can see this has tested it again. Now we wait for a break like that. Do we get a retest? Yes. Okay. This is technically a short. We've got a pretty strong trend. I think we should take this. And then we'll just see where we can take the profit. Okay. I think we can go for that low. We might be able to get lucky and go for this low down here, but considering this trend, I think we'll go for that low. But when it comes down to here, if it comes down to here, we'll look to protect our position in case of a retrace. Down to there is 2.2R. Okay, taking us out. Let's see what happens next. All right, putting in a potential range at the extreme of this level. This could well be our entry, and I got in a bit too early. There's your signal of the break. Pushing up, drop down. If we get a lower low, then we'll short again. Okay, this is not the best looking entry. I would have preferred a candle like that here, and then I would have got in a little bit tighter. To compensate for that, what I'll do is I'll put my stop loss kind of there. I don't think it should be coming back up all the way there, and if it does, then obviously I'm wrong. We will look to protect on this low, should it get down there. All right, in this instance, should expect continuation here. What we've got, we've bounced off the low, didn't get very high, and now it's nuked back into it. I would normally bring my stop down to there, but I'm just gonna bring it a little bit lower in this instance, because I just don't think, considering this information, if it's gonna bounce, it's gonna probably come all the way back up if it gets above this high now. Yeah, okay. We have another potential range forming. So what I'm going to do now, we've got this protected here. It's compressing, it's looking like it's nuking. If it's now going to start building a range here, for example, it could reverse. So I'm just going to move my stop to break even. Handy little tool in Forex Tester 5. Damn, I should have got a ref link. Okay, then we go back to playing it. Okay, so this is kind of where Tom Hugard's book talks about looking for a potential entry. So if it comes back down, we could get another we could get another short, and especially if we've got some risk off because we've gone into break even. But again, I think if this starts coming back up here, it's not going to be good. So let's see. Okay. I could now move my stop down here into profit, but I'm not going to do that just because this is like I said, if we had price action like this where it was a bit more defined and a little bit more aggressive looking, then I wouldn't expect it to push up like this. It just breaks through and continues, but because it's kind of compressing, I'm not too sure. So I want to give it a little bit of breathing room, particularly on shorts, because you've got to worry about the spread as well, which can take you out. So if I moved here to cover and it comes back up and then takes me out on the spread, or it fakes it and then drops down, I'm gonna get pissed. So just leave that at break even. And we'll play this through. Okay. Like this. So basically it's putting a little supply zone. You've got your drop, you've got your consolidation, you've got another drop. So what I would expect here is basically a bit more consolidation potentially, or it could just bounce and then hopefully come down to our target. But it's got down to that M5 level close enough to it for us to protect our risk, which is what we said we'd do. I say we, it was me. Okay, yeah, like that. So if this drops now, if I'd move that down, I'd be pissed. Ah, okay. We might as well end it here actually. You've seen a win, you've seen a loss, you've seen a break even. I'm pretty happy with that. It's kind of covered everything. I've got into the move a little bit late down here. To be quite honest, I should have been more aggressive up here, but the information at that time wasn't totally clear. You know, we could have just as easily bounced north rather than ripping down. And like I said in my previous video, little things like this, like you could have taken this trade like so, that would have been a really nice trade. And it's up to you to read the conditions and see how aggressive you can be. If you're watching the live markets, it's probably going to be a little bit easier. That is one of the things with backtesting. Like I said, it isn't actually perfect, but it gives you this information. I'm talking about this now. You know that this is a potential entry. I could have taken several of these, but it's my experience knows to wait for that second one, kind of like how I did here, even though it didn't play out that well. But like in the first instance where I got the win, I just wait for a little bit more of confirmation. So yeah, that's that. So I think we should go for a cup of tea and reflect on some of the points from this video. And if you like it, we'll do another one.